Okay, good morning, everyone. Good afternoon, good evening. Looks like I need to cover all those greetings given where folks are coming in from. But as Jeanette said, I am Hima Reddy, part of the Trade Thirsty team. Very happy and proud to be. And Jeanette knows the content I'm about to share with you this morning because she helped me take what's been in my brain that I've been doing for 16 years and dump it out into a really clean and easy to teach kind of way. So props to Jeanette for her skills in shaping folks like me who have it in our head and we just need to figure out the best way to get it all to you. So along with the other four ladies today, I'm very excited here to have a strategy to present to you. This truly is one of my favorites and I use it every day, pretty much every chart. My subscribers and past students know this, but I don't want you to have to take my word for it. I'm going to walk you through it, teach you how to use it. It is an indicator, but you can set up your indicator to mimic what I show you before deciding to move forward with me and, as Jeanette said, my offer for today. So let's go ahead and get started. Now, before we get into any of the fun stuff, it's important to remember that trading and investing can be extremely risky business, and it's your responsibility to evaluate any information, opinion, advice, or other content contained in this presentation. In layman terms, or I should say laywomen terms, that means practice, people. Practice on paper, practice on a simulator. Don't go putting your hard-earned dollars and cents, especially Eva, you just won 50 bucks, okay? Don't go throwing that at this indicator until you've practiced with it on paper. So with that, this is me again, Hima Reddy, and I've been, as I said, studying, trading, analyzing the markets for over 16 years. I first learned about them from my late father when I was just a teenager. I was actually 16 years old. And what he was doing by day was being a doctor and running practice, but he would actually trade very actively in his retirement account that he held with TradeStation. And he was super active in equity index futures. And given the time frame, this is the late 90s, this is when those equity index futures just came out on the market. And he was right there when that happened. So I caught my dad trading one day. It sounds bad, but it really was unusual. Asked him what he was doing and he talked about it and I thought, this is awesome. I want to go learn. So he said, all right, well, I didn't move to America from India for you to not have a college degree. So I'll send you off from my home state of New York and I went to Indiana University, go Hoosiers, to study finance because, you know, that's what you should do if you want to be involved with the markets. The thing is, you know, I studied hard, I graduated on time, I did everything by the book. But when it came to learning about the markets, you know, trading, investing, the stuff I'd seen my dad doing, I got next to nothing. I mostly looked at financial statements my entire 4 years of my finance degree. So I turned to my dad, no job in hand, which obviously was not very exciting for him, but said, look, I don't want to just go be an investment banker or an equity analyst like everybody else and just read financial statements all day. I want a more efficient, faster way to know what a market's going to do. He said, all right, I'll let you graduate and move home and live rent-free. You work part-time, and the rest of the time, I'm going to teach you this thing called technical analysis. I said, okay, that works for me. So my first textbook in the world of technical analysis was not one of the modern ones that are really popular. It was actually this book you see here with this bright orange cover called How to Make Profits Trading in Commodities. That's the full title. And you can see it was written by this person named W.D. Gann. And this image here is the 1951 revised edition. So this is Mr. Gann here. And as you can tell from the date of the book and this photo, he obviously was a trader back in the early 1900s, not somebody who was around for me to learn from when I got into the markets. But what my dad had seen in his 20 plus years of trading by the time I came to learn about it was that Gann's approaches, while written many years ago, still worked in current market conditions. And so he wanted to teach me with what he felt was a very classic approach. So I started reading this book. My other assignment was to set up TradeStation. My dad said that was the best in his experience, and so he got me started with TradeStation early, and specifically put together this market that you see here, a 1-minute bar chart, okay? No candles. He didn't want me to get confused with that. Just a simple open, high, low, close bar chart of the E-mini S&P 500 futures. And he wanted me to look at it for 3 hours a day. He said you could pick the open, you could pick the closing time, you could pick a lunchtime if you really want to take a nap. But he said pick a total of 3 hours a day, every trading day for 6 weeks. I was like, wow, that sounds like a fun summer, but okay. So this was my assignment. Read the book, watch the market watch the market, read the book. Does anybody here trade the ES? Because like I said, this was my intro to it. So go ahead and type in E for ES. If you've traded it, you watch it, you're in tune to what it's doing. So I followed this assignment that my father gave me, and I decided, okay, I'm going to take what I'm learning in the book and really try to apply it to this chart. I mean, he didn't force me to, but I figured that was his underlying goal. So along the way, I started to, actually it just took a few weeks, honestly, really see what Gann was describing in words in the book and see it come to life on the charts. So I took things a step further and I made graphic representations of Gann's verbal descriptions of signals and trends and other key price action. And I made these index card sized images so that I had a quick reference at my trading desk. I took things another step further after several months of experience here and started writing my own evening report, if you will, covering what had happened in the ES during the day, looking at support, resistance, so that's price floors and ceilings for anybody who's super new to trading, looking at the time relationships and cycles that were occurring in the market that I was able to kind of hone in on. And I would put all this together and give myself this game plan for the next day. As you can see here, I call this the skinny on the mini because, you know, in American slang, the skinny is the lowdown or like the key points or the essence of something. So the mini, I mean, there are several minis, but to me, the mini is the ES, and I think to many people it is because of S&P being such a key benchmark. So I called this the skinny on the mini, and I started sending these emails to my father. And he just kind of, you know, filed them away, or at least that's what I thought. Little did I know that he was using my levels, my analysis, my timing points, and boosting his own ES trading. He came back after a couple weeks and started telling me what he was using. So I thought, all right, I am onto something. And in doing this process, I realized while trading can be very exciting and intriguing and, you know, a really cool way to take advantage of the relationship between supply and demand, I was much more of an analyst. I loved this analysis and getting the setup for the trade. So I decided I want to leave trading aside for a while and I want to go work on Wall Street as an analyst, as a technical analyst. So to do that, I found out I had to get my Chartered Market Technician designation, CMT. Anybody ever heard of a CMT in here? You can type a C for me to confirm that. This is a designation that is kind of like a CFA, except it's for chartists, which I don't think is a bad word, all right? And so I went ahead and studied, well, several folks know what a CMT is, cool. So you know that at least back in when I took it, and now the process is the same, but just kind of condensed. I had to take multiple exams over multiple years and really study the ins and outs of all forms of technical analysis, not just Gann analysis. So this gave me a really well-rounded skill set. So I went on to Wall Street, worked at an independent research firm, and after a few years, you know, because I'd been in the industry and people knew my unique story and intro to Gann, I got this opportunity to write my own book on Gann's work. And it was meant to be a primer or an intro level guidebook for anyone who wanted to go deeper into Gann's work, whether it's trading methods, which I focused on, or his forecasting methods, which he's probably the most famous for. So my book, pictured here, was published in October 2012. Now, until this week, the answer for where can I buy your book is sold out on Amazon was, I don't know, I'm working on it. But I officially announced yesterday that I have partnered with Wiley, that's the big global publisher, to publish the second edition of this book. So it will be a rework of the existing material with some new material added in. And that will be, you know, at some time from now. I'm working with a large publisher. Timeline is to be seen, but I'm super excited to kind of fill the shelves again and have a physical book out into the world. So once you become a published author in any space, of course, as you know, in this trading education space, suddenly you get this following, right? And before, my little world was me and my dad and then my technical analysis colleagues. But now suddenly I had all this exposure to folks who wanted to see the concepts in my book demonstrated real time. So I thought, hey, the skinny and the mini is the best way to do it. So since I was working at an independent research firm, I could still write and send out the skinny. So I did, and I sent it to book readers who emailed in asking for where they could find it. I also sent it to webinar and lecture attendees like all of you here. And of course, my technical analysis colleagues who actually were using technical analysis day to day. And the interesting thing was that at this point, it just became a blog, okay? I wasn't even having a listserv or anything like that. I just picked a website, put a blog up, and just put it out free to the world. So I had no idea who was really using it regularly, right? I wasn't tracking that. So life carried on, and I got married, and my husband and I, because of his career as a cancer surgeon, actually moved out to Minnesota. And he, pictured here, is from Wisconsin. So if you know anything about the Midwest, just like down in the South with SEC, folks in the Midwest are very into their football, college and professional. And my husband is so proud of the following. He took this New York, Long Island girl and converted me into a t-shirt wearing and a bratwurst eating Green Bay Packers football fan. My family is still baffled by this, but here I am spending my Sundays in the fall and winter watching football. So we may have lost my screen for a second because the market opened. All right. Let me bring it back, make sure everybody sees my PowerPoint. Can you type a P for me just to make sure I've got it back? P for PowerPoint? All right, cool. So in this process of moving, my husband got a private hospital cancer surgeon job, and I got the chance to be on a very well-known equity research team in technical analysis at a boutique investment bank. And it was a really wonderful opportunity, but you know, when you work at an investment bank, now you're really tied in regulations, so you can't publish your own research. So I had to go back to all these folks who'd been getting the skinny and the mini now for several years, and we're pretty happy with it, and say, hey, I'm going to have to close down shop, no more blog. And then they started all telling me how sad they would be to see it go. I had no idea that it got this popular or was this, referred to this often. So I thought, okay, this is a great job and Minnesota's cool so far, but in life, I've got to find a way to bring this back and do it for good. So a few years later, we actually moved to Western New York. So back in my home state, but a different area. And my husband has a job here that brought us here. And I decided, okay, this is opportunity for me to leave my sell side job and bring back the skinny and the mini for good. So I went back to all of those folks who'd been getting it for free and then had it taken away from them. And I said, hey guys, I'll bring it back. And by this time, my father had sadly passed away. But one of the pieces of advice I remembered him telling me was, Hima, if you ever do bring back the skinny and the mini, just give it out for $1 a day to start, just to see, okay? Just to see if anyone would actually take it and pay you money for it. So I did that. I remember saying, okay, I'll charge X dollars for X days, and let's make this a monthly subscription fee to start. And as my overhead increases, of course, the price will go up, but you'll still get great value. And many of these people started happily paying for it. So just soak that in for a second, okay? Think of any free resource that you use for trading and education that you like. If it went away, most of the time, you don't really notice. You're like, okay, life moves on and you go on to the next thing. But in this situation, when something free went away and then came back for a modest price, people actually grasped right at it. So I knew I was onto something with this plan. At the same time, they said, Hima, your skinny and mini, your ES research each morning is great, but we don't want to just keep getting the research from you. We want to learn how you're doing this so that we can apply these concepts to other markets that we trade and other time frames and more. So that's where I brought in educational products and workshops that I could use to teach these concepts. So today the focus is momentum, all right? And if you're still with me, then I think that story and my background either have you intrigued or curious enough to see, well, what is Hima doing with momentum that's so different, right? You've already learned now that I'm a traditional technical analyst in many ways. I have a traditional training from the CMT world, but I have this unique training from my father. Well, this concept that I'm going to show you, I learned during my CMT studies, okay? I did not invent it, but once I learned this basic concept, over the years, I've taken it and expanded it out, and that's all me. So one of the signals that I use around it and the way I use, I'm also going to teach you here. All right, so let's make sure everyone's with us, and let's go ahead and type a M for momentum. If you're still with me, you understand who I am, why I'm here, and you're ready to learn my indicator. This allows me to get a sip of water as well. Awesome, appreciate it. Fred, Ashok, Seymour, Marcelo, Skyla, Ava, our winner. Okay, great. So let's go ahead and everybody make sure we are on the same page of how momentum works. It's super simple. Here we've got price, I'll plot at the top, okay? We all wish price moved like this, right? A beautiful sine radio-like wave. Not so much. Sometimes, but not often. So let's just pretend that in a perfect world, if price was moving in such a smooth pattern, how would momentum move? Well, momentum moves with price. That's tenet number one, if you will. The next key thing to note is that when you have an uptrend in prices, you should have rising momentum with it. They may not be at the exact same pace, but they should be moving in the same direction. The cool thing is that very often when there's going to be a high in price, whether it's a peak that turns into a downtrend or just a high period that results in a correction lower, the peak in momentum usually leads the peak in price. Okay, peak is just another word for high. So momentum peak leads price peak. Okay, so that's the upside. Now what about the other side? Well, when there's a downtrend in prices and falling momentum, again, they're supposed to move together. They are not going to move exactly the same way, but they're moving generally in the same direction. And just like where you get that early indication of a change from an uptrend to a new trend, when a downtrend is changing to something else, whether it's to a sideways period or to a new uptrend, you get this trough. Okay, trough is a fancy professional technical word for low. A momentum trough leads a price trough. So you can see here, following this green vertical line, that the low on momentum came well ahead of the low on price. Okay, this happens quite often. So in the end, momentum is a heads-up indicator, I call it. Okay, a leading indicator. This is not a lagging indicator. An example of a lagging indicator would be, say, a moving average. All right. Doesn't mean that leading and lagging, one is better than the other. It depends on what you're trying to do. But when you're using momentum, it is by design, by the calculation, because it's coming from price, a leading indicator. So this is the basic way it works, no matter what momentum indicator you're using. Now, we're going to return to my new passion in life, which I still sometimes can't believe, football, and take the layout of a football field to help us understand what I'm doing with a very common momentum indicator and how we're going to use it differently. So first, let me make sure, if you do not know anything about American football, just type an N for me in the room. N for no idea, okay, at all. Okay, several people. So this means I need to explain things a little bit more detailed, but it won't take that much time away from us. So this is the field on which American football is played. It's a lot like a soccer field, right? You've got two ends to it and all this playing field in the middle. Here, the football starts off in the middle, and you've got two teams on either side of this 100-yard field. This is the best image I could find to represent a Green Bay Packer and not get myself in trouble with the NFL. I think it's pretty good. I think it looks like Aaron Rodgers. Just got to change that 10 to a 12. And in this situation, when the Green Bay Packers have the ball, right, they are trying to get through their opposing team on the other side to get to the end zone. What's your guys' guess, for those of you who do know football, since a lot of you, who I would think, being married to somebody who grew up outside of Green Bay, who the Packers' biggest rivals are? There are some choices, but who would you say their biggest rivals are in history to the Green Bay Packers? Yeah, I would agree, Scott, and T, it would be the Bears. Yes, Rudy, exactly. So you ask my husband, he will say the Bears, which I think as of last season, they're almost even in their wins and losses versus each other. It's pretty crazy. So here we go, Chicago Bears. Now, all you need to know, whether you've ever seen football before or not, is that each team takes turns having the ball, and their job is to get through the other team to their zone to score points. Nothing happens in the middle of the field. You don't score points there. You don't get any extra credit there. You've got to get to your zone. So when the Packers have the ball, they've got to get through the Bears defense and either run the ball in or throw the ball into this blue area for a 6-point touchdown, or get close enough that they can stop and kick the ball through this gold thing here and get a field goal. That's a few less points. Same thing for the Bears. If it's their turn, they have to get through the Packers defense and get to their end zone to score points. So two things you see here. Number one, nothing really important happens in the middle of the field. Number two, depending on which team has the ball, and this will directly relate to our explanation of the indicator, depending on which team has the ball, they live in different parts of the field, right? They care about different parts of the field to get to their zone. So let's take this whole football field, turn it on its head, shrink it down, and then drop it onto the bottom of a chart next to the relative strength index. Okay, If you've heard of the RSI, go and type ahead and type in R for me. Whether you've used it or heard of it, doesn't matter, but relative strength index is a pretty popularly known indicator. Now, the thing about it that we're not going to change, this is important, okay, is the standard setting of 14 periods. We are not messing with that. 14 periods is half of a 28-day lunar cycle. There's reasons why Mr. Wells Wilder, when he put this out in 1978, did that. Those reasons align with a lot of timing and cycle reasons that I've learned from Gann's work. So we're not messing with the 14, okay? Leave it. Whether you care that it's lunar cycle derived or not, don't touch it. That means when you're on a daily chart, for example, this is the ES futures continuous contract. So it's linking all the front months. Daily, each candle represents one day chart, starting back from February 9th, 2017 through May 4th, 2018, okay? When you are looking at a daily chart, you have a 14-period setting, and that stays at 14. If this was a weekly chart, it would be 14 weeks. If it was an hourly chart, it would be 14 hours, okay? I cannot emphasize enough, we don't change the 14-period setting. So actually, go ahead and type the number 14 if I've gotten it through to you that we are not changing the 14-period setting. And then we're going to go into the stuff that we will change, okay? Now on the bottom, you can see that the default RSI, this is the way it plots off TradeStation, has two numbers, 70 and 30 showing. This is the default. All I did was make the colors or lines thicker for teaching purposes. So the traditional rule is that while the RSI lives between 0 and 100, when it gets above 70, that's generally when you consider market conditions to be overbought. Overbought means like too much buying has gone in. Where are the buyers going to be to absorb all of this new buying? If they're not there, then the market may turn and go lower. So on TradeStation, by default, when it gets above 70, it turns red. That's not necessarily a sell signal on its own, but can you see how by getting this red flash, not flashing, but this red indication on your screen, you might get bearish at times where it would be rough to go short? All of these times in this example of a strong uptrending market that then became a sideways market, in all these situations, selling really did not produce very good results for you, right? So you got into this sell mode and pick a top mode too soon if you follow the standard indicator. On the downside, when you get below 30, so we still are 0 to 100, and when you get below 30, the RSI on the standard indicator on standard platform turns green or blue or something like that. And then it changes when it exits out of that and comes back to normal conditions between 30 and 70. And buy signals generally live below 30. But here's the problem with this. Look at all the price action along the way, okay? So I've got my little GoToWebinar highlighter and follow my little yellow pencil. What about this? Wouldn't you have liked to buy here or here or here or here? All of these opportunities, with the way the RSI is set up by default, there's no indication that you should be buying. There's no clue. Now, you might think, well, that's just how it's meant to be. But there were a team of technical analysts who, around the time that the RSI came out, saw this issue that I'm presenting to you. So they did a lot of deep study, and they're the ones who said, don't change the 14 period, but here's how you can use the RSI to make more use of the entire field, okay, just like that football field. So when it comes to using only the standard approach to overbought, oversold, we're going to call BS very politely. And now we're going to change things up. Remember the bears. The bears on the football field have to get to their zone to make anything happen, right? To score points, to win the game. Similarly, the market bears, they live in a certain part of the RSI. So there's two zones, and I got the zone's name from this way I was thinking about football, that are very powerful when it comes to observing a downtrending price or a correction. Now, we don't necessarily have that example in this ES daily chart, but you're going to see that on examples ahead. So this is the part, guys, where if you haven't already, keep your little app to take notes open or get a pen and paper, and these are the numbers you want to jot down. You'll see them repeatedly, but it would be good to write them down and have for reference because you have a lot you're going to be learning from several folks today. RSI bear resistance power zone is between 55 and 65, okay? The shaded area that I just drew out. See how it is not up at 70. When a market is weak or in bearish conditions, it should get overbought at a lower threshold. So this makes sense when you think about the way that a bear market moves. Similarly, the bear support power zone is from 20 to 30. Yes, this includes the standard 30 level, but by pushing the boundary out to 20 and keeping that whole 20 to 30 range in mind, it forces you to stay with the downtrend longer and not get bullish too early, trying to catch a falling knife, as my dad would say, trying to pick out the bottom of a market. So if you've got these bear zones and numbers down, then go ahead and type a C for Chicago Bears. And then we'll move on to the bull zones. Okay, great. So the market bulls live in their own part of this territory, and you might already be thinking, oh, they probably live in a higher section. And that's exactly right. When a bull market or an uptrend or a strong rally is in force, generally it actually reaches its true overbought condition when the RSI reads 80 to 90, not just 70. So you can see very clearly here how by focusing on 80 to 90, you had much more distinct points of being overbought. And look, this last big burst into January and February, January I should say, fall into February, that was a true overbought signal that had followed through in price for the top. But by focusing in on the 80 to 90, it allowed you to stay with the bigger picture bull trend for longer. The bulls have support at a higher platform than the bears. So the bull support power zone is from 40 to 50. So now if you look back at all those points I had said, hey, wouldn't you want to buy in this chart? Like these lows and these lows and these lows and these lows. Well, now look, there was some action in the RSI that might have clued you into, hey, this uptrending market may be resuming higher because it's finding support in the bull support power zone from 40 to 50. You're not waiting for this 30 level down here. All right. So this is what I use on every single chart to get a sense of the trend, whether it's going to persist or whether it's fading out. But you can also use the RSI to trade with the trend. That's not as commonly known. Okay. We're going to focus on the more traditional approach now so that I can teach you a signal around it. But there are ways to use it to trade with the trend. So if you guys got the basic definition down and you're ready for an example, go ahead and type X for example, if you're ready for me. I just want to make sure I have everyone here on the same page. You've got the basic indicator settings in place and you're ready to see it in action. All right. So I obviously teach this concept, every now and then. This is not my first time. But what I do is I take the time to go and pull out new examples. Why? Because I'm telling you now, being transparent and here now, that what I will offer you at the end of this session, so in about 43 minutes, is a way to get into my RSI Power Zones workshop. But from that content, I'm going to pull a signal that is taught in that paid course. Okay, so we're going to do that now. What you're seeing here is the landing page for my himareddy.com member portal. Okay, it's just all my offerings right now. Let's focus on power zones and go ahead and now get familiar with how it moves. So the wonderful thing about power zones is that they can be used for analysis and signals on any active market in any time frame. I repeat, RSI power zones can be used for analysis and signals on any active market in any time frame. Here are a few examples of common asset classes that have been traded for a long time and common time frames that you might be looking at. Okay, so go ahead and type a Y for me if you see an asset class or a time frame or both that you actually trade on this screen. Okay, I should see lots of Ys because otherwise I'm not attuned to what people are doing. Okay, now obviously we can go lower than 5 minute, but I want to get the full range of exposure to you all, whether you're day traders or swing traders, excuse me. So what we're going to start with is a commodity on a monthly chart. And when I pulled up this example recently, I actually realized that the entire chart that I'm about to show you covers the timeline of me starting to first read that Gantt book and use TradeStation to today. Okay. So this is the continuous chart of oil at CL is the symbol on TradeStation. Monthly chart. We're going to start with the month ending May 31st, 2001. I really didn't realize it until after I drew up the chart. I was like, oh, that's the month I graduated college. That's when all this fun began and fun with the markets began, where my father was teaching me. To current, okay? So the current month is May, and it's 2018. So 17 years of oil history, and see what the RSI power zones would have told you had you been following it. Now, obviously, there's more price action than what you see here during that time. By design to teach you, I cover all of this up with white space so that we focus on the concept at hand, and I will unravel the price action to you as it goes. So bring your eyes all the way to the left and the bottom of the screen. See here that I don't use shaded zones for my RSI power zones indicator. I just use lines. Why? Because I want your focus to still be on the indicator itself. Okay, the value of the RSI, the direction it's moving, whether it's broken recent highs or lows, those are more important than the actual shaded areas. So this keeps your focus on that. So again, the bear support power zone is 20 to 30. The bull support power zone is 40 to 50. Bear resistance, 55 to 65. Bull resistance, 80 to 90. So back in 2001 up to 2005, we had a rise, and you can see that approached bull resistance. Now here's something interesting. When oil fell, it was after it had risen further, even though we had already peaked on the RSI. So what I mean is this. All the RSI did was work itself off from a bull support power zone, bull resistance power zone to bull support power zone, but price still kept going higher, then corrected lower. This is why it's not just as simple as trading back and forth between the zones, okay? So this happens quite often, not just on monthly charts of oil, but on intraday charts of the markets you might be trading. In 2007, we had that low that held in the bull support zone on a monthly chart, rallied again, hit the bull resistance zone, and then from that high, when the market fell, obviously it fell in a very strong way. You wouldn't just look at this and then be like, oh, I need momentum to tell me that the market's weak. No. But when you look at how momentum behaved, it fell from the bull resistance power zone to the bear support power zone. Now here's the interesting thing. Over all those years afterwards, when oil was going sideways between about $100, $140, look at all of the highs. All of the highs in oil were with oil finding resistance on the RSI in the bear resistance zone. After a sharp decline, that would have kept the long-term view on oil not so bright. And then we had that massive fall again in 2014, 2015, 2016. But look, even though it was this big fall and everyone was like, oh my God, oil's going to $20, it traded lower, came into the bear support power zone, turned higher. And here we are now, where this is a chart captured as of Monday or Sunday, but we are back at the recent overbought levels. I am not saying that oil is stopping its move higher. I'm bringing your attention to the fact that now we are at levels on a monthly chart that we have not seen on the RSI for like 3-4 years. Keep that in mind, okay? So you've got to see a lot of price persistence through all of this old price resistance back here. Like until oil gets above $80, I'm not that excited about it in the long term. I think that it has more upside, but I think $80 is very important. And so this is just a walkthrough of a chart that obviously is of a market that you all know and a very big time frame to get you comfortable with the zones and how they move. So if this helped you get an idea of how you might see this live on a chart, go ahead and type an O for me and we'll move to our next example. So now we're moving on from a big giant monthly chart of a continuous commodity to equity index on a 60-minute chart. Great. So again, these are pre-prepared examples, but because I have 75 minutes with you, which is very unusual, we'll have plenty of time to look at live markets. So whatever tickers you might want to see me analyze with the RSI power zones, jot them down. Don't put them in the window now because I'm not going to look at them right now. When I bring up my TradeStation, come back around, okay? So let's take a recent skinny on the mini chart, okay? I publish a 60-minute chart 99% of the time because to me, in my experience, again, 16 plus years of studying that market, because that's the lion's pit my father threw me into, the 60-minute chart gives the best essence of that market, whether you're looking at it for a long-term view because you're trading options or something, or you're actually trading small lots or large lots, whatever, on the ES itself. So this is the June front month, okay? June 2018, M18, 60-minute chart, and this was just from a week ago. May 1st, 8:51 a.m. is when I captured the chart. Now, looking back before the price action that was relevant to that day's report, I'm just giving you a sense of what this market had been doing. There was this rally higher, and you saw the RSI power zones cap at the bear resistance zone. There was a very sharp move lower after that, fell into the bear support zone. Now, what you see here is essentially what I published this morning the prior morning for my subscribers, okay? And I pointed out what you see with these yellow circles, a situation where price and momentum were not behaving as they should. Price was going higher, but momentum was going lower or giving a lower reading. What's that all about? Well, that's the first signal we have. Situation here, now I've taken that simulated price and momentum action and added some realistic squiggles to it, okay? That's how price moves. So we had a higher high in price, but a lower high in the RSI. They're moving away from each other when they should be moving together. Moving away from each other, another word for that is diverging. So this is called an RSI bearish divergence. This is a very commonly used signal on the RSI. I didn't invent it, but guess what? In my experience of using the power zones and learning about divergences, I started to come up with very specific ways to approach the divergences depending on what zone they're occurring in. That was me. That was not something that was in my book. That I extrapolated and started using after many years of experience. And that's what you're going to be getting a peek into now. So it's not just that there's a bearish divergence. There's a bearish divergence with the RSI in the bear resistance power zone. So this is a situation where it's best to watch for a sell entry set up on price. It is an actionable sell signal. Now, of course, you still have to consider your own risk reward, your own trading time frame, your account size, all of that comes into play. But when you see on any active market, meaning a liquid market where you can enter in and out easily, on any time frame, this is not well suited for tick charts, time frame charts. If you trade tick charts, you can use a higher time frame like a 5-minute chart or a 3-minute chart to study the RSI power zones, but I would not apply RSI power zones to tick charts alone because tick charts by definition don't have steady intervals of time in them, right? So that's my other kind of side note. This is for active markets in any time frame. So here you watch for a sell entry set up on price. Okay, well, if this is the world we were watching, there was no reason to sell in the sense of price here, right? We had no confirmation. So then you wait for price confirmation, which would be a break of a higher low, a bearish candlestick pattern, etc., and look at the move that it provided. Okay. Some of this move, the divergence, happened before regular market hours. But let's walk through exactly what happened that session. Okay, so we're coming to May 1st. So this prior trading had been April 30th, and I had alerted my subscribers to this divergence, and I gave them a specific support level to watch along the way. Look at this entire green arrow. That covers the entire regular session move. There was a high put into the 10 a.m. hour, so the hour ending 10 a.m. Eastern, and that price high was 26.8175. ES futures, if you're not familiar, move in quarter points. Each of those quarter points is $12.50. So 4 of them make $50. 1 ES point, $50 in move. So 26.8175. And at the hour ending at 4 p.m., okay, I'm shaving off some off actually because the ES trades till 4:15 Eastern. But hour ending at 4 p.m., you got a low at 26.4575. If you do the math, subtract those two numbers and multiply by 50, that is an $1,800 move in one trading session, and this one signal clued me to it. How you go and act on that, there's further layers to it, right? There's, like I said, the types of price patterns and such, but this is the signal that you have to recognize first. So you think if this is something that you would like to be able to identify in your markets, go ahead and type an 18 for 1,800. Just again, because I don't like asking for whys and no's because it gets a little repetitive. So if you feel like, all right, I would like to know how to identify this and how to identify it relative to the zone so that I can find moves like this in my markets, great, awesome, seeing lots of 18s. So moving on from an intraday equity index futures, now let's move to a stock, an individual stock, and let's get a 60-minute, because for many stocks, again, whether you day trade or swing trade, the 60-minute chart is a good point of analysis. And I'm going to move to Apple since it's a market that everyone is familiar with. Okay, I don't want to like pick some random stock where nobody's paying attention to it. You can follow through and see how this is unfolding by pulling up your own chart of Apple and looking at the signals that I'm going to show you here. So here is Apple as of Friday, May 4th. So the Friday, May 4th stuff will show up to the right here. But here you have a situation where price and momentum, again, are not acting together. They're not acting in unison. You had a lower low in price, higher low in the RSI. Lower low in price, higher low in the RSI after a downtrend is a bullish divergence. Okay, it is the exact opposite signal to the bearish divergence. But just like with the bearish divergence, the significance of the bullish divergence depends upon which zone it is occurring in. And in the workshop, I detail all 8 scenarios, right? 2 types of divergences, 4 zones. 2 times 4 is 8. But now let's just look at another example. So we already covered bearish divergence and bear resistance power zone. Now let's look at bullish divergence in bear support power zone. How do we know this is the case? Again, we're getting a lower reading on price, but a higher reading on the RSI. And it's happening right in those lines, 20 to 30. That's the bear support power zone. This is a situation where either you exit your shorts or lower stops. That's the recommended action, okay? So let's say that you had been short from, I don't know, let's say you had stops around this consolidation and you were lucky enough to get short somewhere around here, okay? So let's say you were short here. When you see this signal coming up, you can start trailing your stop. A popular way that Gann did it was 2-bar highs. So he would take the latest 2 completed bars and trail the stop if he was going really, really tight to the price action above the second bar. Not the first bar, but above the second bar. Or you could be more conservative and just trail to the latest lower high. Okay, either way, if you're short from here, and then now you're protecting here or protecting here, this signal alerted you to that, and you're going to capture more profit out of the position you had. If you're not short, then it would be aggressive, but there are ways to enter long. And I say aggressive because why? This is not a confirmed price change to a new trend. This is just an early signal. You need price to confirm it. So if you did go long, now you can see what would have happened. If you did go long, you would have had on an intraday basis or a 2-day basis here a good run, right? Several, 2-3 days here of upside. But it still all stayed below the latest lower high. The downtrend stayed intact. But now look, guys, there was a third divergence, a third situation where you have a lower low in price, but a higher high in the RSI. Okay, it's the same signal, but when you see 3 in a row as opposed to the 2, it's generally a stronger indication that there really is going to be a reversal from this move. So you can see my directions didn't change. But in this situation, it would be still aggressive, but less aggressive to be able to find a way to enter long. And if you did that, then obviously you guys saw what happened. Now, I'm not just looking back at what the market did and saying, oh, let me go take advantage of this giant gappy move and make my indicator work around it. Anybody in this room who follows my work, who's even at the least, if you just get my free weekly Wednesday updates where I just comment on different markets, it's not the same thing every time. Just last week, I did a FANG update, and I was pointing to how when all this price action was happening here on a daily chart, Apple was setting up for a low. So if price patterns and time cycles and things are already suggesting to you that a reversal might be imminent, then the momentum indicator just adds another layer of evidence and adds confidence for you to take that move in the other direction. All right. Now, this was a big move. It was still going into Monday, Tuesday, but I captured this chart on Friday or Monday. And you can see this green arrow covers the following. April 27th low at 160 $160.63 per share. As of May 4th high, okay, because again, this move has extended beyond this, but as of May 4th, Friday, the high was at $184.25. So that was a $23.62 move in 6 trading days. Not too shabby for one signal coming in on momentum that would emphasize this changing energy, if you will, underneath price. So if this Apple 60-minute example is adding to your confidence that you really can look for this signal in any market, any time frame, go ahead and type an A for me. A for Apple, A for any market, A for any time frame. Okay. And we're going to go, I have still 25 minutes and we're going to go to live charts in a moment. Great. So now after seeing several examples, you might be thinking, okay, Hima, so do I just basically trade back and forth between the zones and look for divergences? Is this your magic formula? No. Why? Because you might get caught in something like this. Okay, this is a chart of the ES back from January, but it is a perfect example of a situation where look at the action on the RSI power zones, look at what price did. You had a higher high, then a lower low, then all this choppiness in between. And even though you had signals along the way, it was not a very clean move. Okay, these yellow highlights were pointing at the fact that in the big picture, it was staying between the bull resistance power zone and the bull support power zone. But if you were trading this intraday, you would have been really chopped up if that's all you were doing, looking for divergences, which you did get, and then looking for movement between the zones. So what is it that fills in all the rest of that? Well, that's the other content that's in my RSI Power Zones workshop. So again, this is based off my 16 years experience. It's 100% content in there. There's no other hype. There's no other like fluffy stuff. There's a recap of course, of the divergences and a recap of the way the indicators use that I just showed you. But besides that, everything else in there is new, not in the presentation I'm giving you. This is all in the form of an on-demand video tutorial. On-demand means you can log in anytime you want, watch it. You can watch it 5 times, 10 times, 100 times. It's up to you. And you have access to it for life. So that if I ever update or add to that particular course portal, you will get the updated changes reflected. Okay? You don't have to come in and get an upgraded version or something. Now, on-demand learning is great. It's convenient. But at some point, after you learn the remaining content in there, you're probably going to have questions for me. Or you're going to want to see me actually use it on other markets that you're trading and have a private session together. So for this current class of the RSI Power Zones workshop that I'm running, I have a live Q&A bonus session that'll be on Thursday, June 7th at noon Eastern. And it'll be for an hour, and you can come live. You'll be invited in automatically. But if you're not able to attend live, that will be recorded and put in your course portal for you to have access, again, for life to that session. So this is that content part, and what these topics cover include some of the following. My favorite RSI pattern setups. One of them is the bullish bearish divergence. Another is one that you can use to calculate price targets. I'm going to show you one a little bit on Twitter that I calculated using price and momentum that's still active, like still in play. The best candlesticks patterns for trading RSI Power Zone signals. A little side note about my experience with candlesticks. After taking the CMT and being very involved in the MTA, I actually at some point along the way decided to grade exams, CMT exams, and then write questions for CMT exams. My greatest experience of grading and writing was on momentum. I would write exam questions on momentum. So obviously I had to test people who are trying to become professionals. And I would do a lot of grading on candlesticks, see what candlestick patterns people were identifying and grade their accuracy as per the definition, the existing trend. So my point is that these are things that I've had to absorb a lot of information on, but then I have whittled down to the few signals that I think are most powerful, okay, after being exposed to so many. Trading bar chart reversal signals. This is a little different. This is a situation where you can do it in a candlestick chart, but this is probably my most reliable way to get support and resistance out of the market. And there's several more topics, okay? It's all laid out in a multi-step approach, and I walk you through each step. Now, I had mentioned to you that with the divergences, it depends on where divergence is happening relative to the zones. So in my head, I decided to make myself a cheat sheet when I was starting to use this more actively. And now I'm giving that cheat sheet out to you along with others. There's a packet of cheat sheets. This is like an 8.5 by 11 PDF that you could print out, use to study what you're learning. So you'll get this as a takeaway tool, and you will have instant access to it in the portal after you sign up. So you have right away access to the tutorial, the video tutorial education, these cheat sheets, and you have instant access to the RSI Power Zones indicator. In my early years, I had to spend time drawing the lines on every single RSI and every single chart. It's doable, it is not fun, and it is a massive time suck. No other way to explain it. So as I built this out, I got programmers to create for me on the most popular platforms the RSI Power Zones indicator. You can see here, I've got TradeStation, Thinkorswim, NinjaTrader 7 and 8, Sierra Chart, Trade Navigator, eSignal, and for Ensign, that's a free software that one of my longtime subscribers used. He provided the setup instructions to make the changes. There's also instructions for installation, including a Thinkorswim installation video. Now, let me make this very clear. There is no limitation to how many of these indicators you download and set up or how many times you do so. Let's say you're like me and you're currently using TradeStation, and so you sign up and you get the TradeStation indicator. But then let's say for some reason you decide to try Trade Navigator 6 months from now. You can come back into your same portal that you paid for just one time, download the Trade Navigator. Let's say you have TradeStation or any of these platforms on more than one machine. You can go download it multiple times. So these are the options I have available, but you are not limited at all to how many times or how many machines you use them on. So it's a lot of information. Before I summarize, I just want to give you some comments and feedback from folks. I've been teaching this concept and providing this indicator for about a year now. So in just a few months, Rob from Canada says, Hima's RSI indicator has become the standard on all of my charts. Thinkorswim, NinjaTrader, and Metastock. For Metastock, he must have set it up himself. I install the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. David in Washington. And Susie from Colorado came back and said, my first month using RSI Power Zones was also my best trading month so far. Correlation and causation are two different things. I'll be the first to admit that. But she has stuck around since then. She didn't just come by for 1 month and leave. She's still one of my subscribers. So what my special offer is for you guys today, and then we still have plenty of time to look at your ticker requests, is the following. The value of these items is what I'm listing out now, okay, but this is not the price you will pay. The value of this course is $9.97. The value of the indicator plus the cheat sheets and everything else is what's in the course, and now the indicator is $297. Live Q&A bonus session, so time with me that's dedicated to just our class of students, is $197 in value. So when you add this all up, this is over $1,400 in value, but you can get it for just a one-time sign-up fee of $97, and you can sign up for that at himareddy.com/power, as in power zones. So POWER. You don't need www, just go himareddy.com/power. And maybe Jeanette can drop that in the chat box here if anybody just wants to click over to it. But what's important is that when you have this information, it does a couple things for you, okay? Taking what you learn here now with me is great, but why you would need the workshop on top of it is to get the detailed strategies, as I mentioned, on how to best trade with this indicator, prevent reinventing the wheel, okay? I'm the one who had to learn as a teenager and a young adult from my father who, God bless him, was wonderful, but was not designed to be a trading teacher, okay? He was a doctor who had this daughter who was so interested in this, and so he made it work. I had to learn a lot of things the hard way and figure it out for myself. Why suffer through that, okay? Take from my experience and make it easier for yourself. And also save yourself time and money in the long haul, okay? Instead of trying to take this indicator and derive everything I have from 16 years for under $100, you can get a massive insight to what I'm doing with it. Now, here's what happens after you sign up. After you sign up, you actually get an immediate workshop login info email. So it will have your username, your password, and the location. And something I don't usually do, but I'm going to do for you guys, is I'm going to show you what the inside of the portal looks like real quick. So here's today's skinny and the mini. We'll come back to that in a moment and see what the market's actually doing. Now, you're seeing like an administrative view of me with this portal, so you're seeing a lot of stuff up here. You're going to see Resource Center, okay, after you sign up and log in, and it will have all of the details of the educational video laid out, so you can go to different parts to review different steps, your Power Zones cheat sheet to download, and your indicators. And like I said, there's a video for Thinkorswim. Well, that's it, okay? That's it. That's there when you get started. Then, after we have a session together, okay, again, I'm in an administrative view here, so all these past class sessions that are bonuses for other students, you will not have those. You will get your specific class session because it will be more relative to the way the content is now and to price action now. So at the end of all of this, after June 7th, you'll have Resource Center and your bonus session tagged. But right away, you have the video, you have the cheat sheet, and you have the indicators to download. Now, if you're interested, when you go sign up, you will be led to a page that has a severely discounted trial for 30 days to the Skinny and the Mini. That is a severely discounted 30-day price, and then it renews at the regular rate. It's up to you to take that or not, but it's just built in with like a one-click option to make it easy for you. Now, if you just go for the course, you'll get this Resource Center login, and then you're going to get a GoToWebinar registration for the bonus session, and of course your receipt. Okay, I tell you this because I can't tell you how many webinars like this I used to watch with my dad, or I used to go to Trading Expo with him and just, walk around with my notebook and try to absorb everything I can. And when you did buy something, it was just very confusing. Well, what am I supposed to get? How do I know I have all the pieces? So this is why I tell you. Now, I'd mentioned to you that I had Twitter with a situation where I used price and momentum to calculate a target. So that's a stock, and I'm going to show you on a daily. And we're going to immediately go, like 15 minutes, which is awesome, to actually just walk through charts with you. But here's the prepped chart of Twitter, okay? Twitter daily, back to October, and this was through May 4th that I captured. Now, what I'm showing you is that as of this date, April 10th, you could have used what's happening on the daily chart between price and momentum to calculate an upside price target of $39.13. As of May 4th, that was still in play. Let me go grab my TradeStation charts and we can see where it is now. Okay, so as you can see, I have multiple time frames up here, but just to keep things simple, we're going to expand out and I'm going to just change the symbol in here. Twitter. All right, well, it's still in motion. Now, April 10th, it doesn't mean that we are going to go straight up to that target, but the uptrend is still in place, right? We have this higher low. We have another higher low that's forming. Guys, look at the power zones. You guys tell me, now that you've learned, where is the power zone lifting out of? Where's my cursor hovering? You guys know the name of this zone yet? These two green lines? It's the bull support power zone, right? It is the situation where if there's an uptrending market, you're expecting that market to find support here. So let's take a look at the history of Twitter for a moment. And now you guys go ahead and put your ticker requests in the question box. The link for sign up is up here. The sign up link repeats which platforms I have the indicator for, okay? And it repeats all of the contents that are included in signing up for the course. But I'm going to get through as many as I can. All right, I've got 13 minutes. Let me see what kind of world record I can do of answering your ticket requests. So I'm writing them down as I see them. CVXNUGT. Okay, I'm not really sure I'm familiar with that one. The ES, of course, good old ES. Tesla. Come on, guys, I need some more. You're not filling up my time. Okay, now let's look at Twitter from here. Starting from this base in October, we had bull support, bull support. Here, it whipped below slightly, okay? So let's actually go see what that level was. It came down to 37.36. But that was just for 2 days, that's it, that it fell below the bull support power zone. After that, it went up higher. Okay, I'm writing down your tickers. Okay, And you can see now that that's still in motion. So I still have that target sitting out here, okay? 39.13. Keep an eye on it. But if you want to learn how to actually calculate it so that you can go look at your other markets and see where that is, then that's where you'd learn in the workshop. Now, next ticker. I'm going in order of the list that I see you typing out. Okay, CVX. Now, these lines that you see, I'm like very, very color focused. And so blue is always for resistance and pink is for support. So that means the last time I looked at CVX, I had identified resistance here. And so this is not in play anymore. And support down here. Well, we've since held that support. And now we have been, after this massive move lower, we have been improving out of the bear support power zone, held the bull support power zone, and then shot up higher. We're still trending higher in price. There's no bearish divergence. We're pushed above the bear resistance power zone. So for CVX, my next upside target, and you'll understand why I'm picking this level when you take the course, but my next upside target is going to be 131.60. All right, next, NUGT. Oh, okay, a gold miners index. Interesting. So for this, just to give us all some perspective on gold, first I'm going to go longer term. Okay, monthly, all right, weekly. Okay, so this has been in this big sideways kind of range because all the gold things are related, but they all move slightly differently. If you're looking at gold itself, like actual physical gold, you know, in the spot price, or if you're looking at mining. All right, so here's the daily. So if I look at this closely, it looks like 38.01, wait, 21.40, 21.25. Okay, so back here, we did have a bullish divergence. That has played out. However, look at how we are still below the lower high that's like defining this entire move. So the bullish divergence was there and it was great and it gave a nice, steady, but choppy move higher to trade. We have since fallen lower, but we are not breaking below any swing lows. To me, this is the swing low, March 28th. Okay, we corrected and we're coming back higher. In fact, we are attempting to get above the April 27th high. And this is all happening with the RSI improving out of the bull support power zone. And note this, guys, divergences don't always have to be these big giant swing things, okay? They can be bar to bar. So here, we had a low in price of 25.06, then a low in price of 24.36, but look, the RSI turned higher. So that was a bar to bar bullish divergence in the bull support power zone. Watch for buy setup on price. So I am looking for further upside on NUGT, next upside target 27.55, but most important is this 29.32. All right, so I've got 1, 2. Now let's go to the ES. Let's go to my baby and let me see how she's doing. All right, so what did I write this morning? What's happening? This is a good way for you guys to see if I'm, how my batting average is. So skinny for Wednesday. This is what it looks like in the portal, okay? I send it by email, but then I publish it to a portal so that you get this gorgeous, look at this, like HD quality chart. And below is my prior commentary. I literally account for exactly what I said this session before, so I can't hide, okay? I'm very accountable to what I'm telling you so you can see if it's useful. I recap, and then the outlook is what I think for the day ahead. And if I have bullets like this, then the first bullet is what I think is going to happen. So while futures remain above 26.77, I'd watch for strength to follow through above 26.88 to reopen 27.0375. So let's see what those levels are on the chart. Now, this gray vertical line represents the last time I published. So since this was a chart I updated this morning, this gray vertical line represents yesterday's update. Okay, so I'm going to move the line now to represent when I published this morning, which was right into the 8 o'clock hour. Like 7:59, I captured the chart. Now, we are falling below 26.77 on an intra-hour basis, but we are really not closing above it or below it with force. We're testing that support. So it's just a bit of a choppy time, and that's because on the big picture, you can see these two purple vertical lines. I've been saying for at least a week that I think this is a very, very, very important timing point for the ES. I think we're at a massive inflection point, either for, and this is where I'm going to draw. So when I draw, this is just based on my experience. This is not me using a crystal ball, okay? So I don't trade when I'm about to draw. What I think could happen, two scenarios. I don't have a crystal ball, so I don't know. If we persist with force through these highs here, then I think this is a massive acceleration and we break out and we have a good chance of retesting the high from January. I don't say we're necessarily going to new highs because you can see I have some trend line resistance, okay? But that's scenario one. The other is that look at where the RSI power zones are, guys. They held the bear resistance power zone. They held the bear resistance power zone, and we're very close back to that. In fact, I'm going to take all this color drawing off. Look at, and now this is just the contract chart, guys, okay? This is not the continuous. This is just the M contract. Look at how close we are to this trend line drawn on the RSI, okay? This is a signal I teach out of my other RSI Power Zones course, which is Top Trading Strategies Using RSI Power Zones. However, that's something I teach openly, so I can give you a clue now. It's an RSI trend line sell. However, in this situation, because we're in a giant consolidation, I would be very careful with it. But I will say that the reason that this breakout scenario to me is only one option, and that the other option is that we fall lower, is because of how resistance, how are the RSIs back at recent resistance levels. So what would confirm a breakdown on the ES for me, looking at the big picture, is if we went below yesterday's low. That to me would be not a good sign. I would think that we'd actually get back to this black trend line and then very likely test the February low, if not go lower for the rest of May and in June. So there's my look at my baby. Let me come back to your markets. So somebody did ask about the ES, so I covered it. So far I'm at 3 ticker requests in several minutes. Well, I like to give you a lot of detail on them, but now I'm going to go like a rapid fire, and I'm going to bring back my link here, guys. So I'm coming up on 4 minutes to my end of my session here, but we're going to go look at Tesla. Now, on Tesla, you can see this orange line, I believe, was marking how we were holding in the bull support power zone. But more importantly, look what happened. Lower low in price, higher low in the RSI. Now, this is not after a major downtrend, but it is after a corrective move lower. So this is a good sign that has already been playing out for Tesla. However, given the recent massive trading range, I don't anticipate any really big move higher unless we can get through this 309.50 area. And look at the big picture. Okay, look at the big picture trend. If I take my little highlight tool here and I draw the moves, okay, we rallied up, sharp move lower, move higher, divergences the whole time here, lower, higher, lower, higher. This is all a more downtrend type situation to me. So also look at the fact that even though we had a bullish divergence recently, we're still at the bear resistance power zone. That's the thing about consolidations, guys. These RSI power zones can clue you into what's happening within it and get you primed and ready earlier for what direction the breakout might be. So Tesla has key resistance at 309.50. On the downside, if we break below this low platform that just formed, then that would be bad news. And I would think that we'd actually get not only back to this April low, but back to some old highs, see back here, from July and June of last year. All right. Let me just go back to the summary one more time here, just to make sure everyone's on the same page. So what I am opening the doors to is my RSI Power Zones workshop, and here's all the contents of it, okay? You get the on-demand education accessible right away, cheat sheets to download, Power Zones indicator, and a Q&A live session on June 7th. All right. Well, B-Man, you're asking me about looking at oil when the inventory numbers comes out, but that's at exactly 10:30, and that's when I'm supposed to hand over the mic. So unless I have Jeanette's blessing to tap into your 15-minute break, I don't think I can cover that. But let's go look at oil anyway and see what's doing into that time. All right, so let's look at oil right now. And you had mentioned a 60-minute chart. So this is a daily chart. So let's go to a 60-minute. All right, we rallied up to the bull resistance power zone. We fell to the bear support power zone, and we rallied up again. So we are now at a situation of a lower high in the RSI, even though price went higher. I would watch this little low extremely carefully, 70.46. If we break below that, and it looks like the weakness might be coming in now to follow through. If we do, then my first target would be a 50% retracement of this whole move, 69.40. And when you look at that, that actually kind of harkens back to this previous low, okay? So if we break below 70.46 on the inventory news, then watch for 69.40. It could be hold before that, but I would watch for that. And on the daily chart, to get some upside perspective, in the daily chart, I think I had been telling some folks in a different webinar recently that my next upside big target is 75. So I said 80, which is true for the long-term picture, but $75 would be the next upside kind of right up here, okay? Not a straight shot. I would think it would take a couple weeks. All right, so it's 10:30, and I am out of time. I hope you guys found that to be helpful. I would love to know, I think I'm just gonna see it on a scale of 1 to 10, 1 being I should have slept in, 10 being that was cool, I learned something new. Definitely let me know your feedback so I can make adjustments going forward. I'm here to serve you instead of just sit in a bubble and trade and analyze by myself, all right? So awesome, thanks for your feedback. And I'll see you guys in the course, live session June 7th. Again, one-time payment, $97. I like to keep it clean, but I'm getting messages from Jeanette that I can keep going. So until she jumps on here, I'm going to keep taking ticker requests. All of you know that you have another speaker at 10:45. So if you need a stretch break, now is the time for it, but make sure you're back at 10:45. And I'm going to keep going through the list. All right, currencies. We didn't get through currencies. GPB, JPY. All right. Zooming in on pound yen. Let's see. So we recently had a situation of a lower high form after breaking a higher low platform. Okay, $97 one time. Yes, Nico. That's it. One-time fee, nothing renewing. Should you choose to take the discounted skinny on the mini subscription offer, that would be a different situation, but everything is explained in the video that follows. You can click the button to say, yeah, I'll take the trial for $7 and renew at the regular price, or you can deny and just stick with the workshop. Up to you. All right, so we broke below this low. We rallied back. We're holding in the bear resistance power zone for a long time here. Lately now we have a little burst higher, but I think there's more downside on this. So what I'm going to watch on the upside is if we return back to this high, because when I look at this move right here, actually I need to go intraday. I need to refine this. All right, so when I look at this intraday and I take this entire last move that we now have a recovery happening off of, yes, so my resistance that I would be watching is around 150 here. And I'm going to go back to the daily chart from there. So on GBP, JPY, ticker symbol, for anyone who's not familiar with currencies, I'm looking for this further upside to probably cap out there. It's a combination of 50% retracement of this move as well as the old bottom from April 30th. And probably continue lower from there. And if we do, then this is the key low to watch. Okay, let's see, VZ. All right, Verizon. I think that's VZ. Yeah, Verizon, okay. On Verizon, ooh, ugly move we recently had. But, and again, this is a chart that I haven't analyzed much lately. Guys, the R-side power zones works for day trading and swing trading. My subscribers see it every single day on my 60-minute charts. You can use it on 15-minute, 5-minute, 3-minute, 1-minute. The longer the time frame of the chart you analyze, the more reliable the signals. That's in the case whether you're using power zones or not. But you absolutely can use them if you're a day trader and if you're a swing trader. The rules, everything are the same. Okay, so I think that there's a good chance. See, what I do here is I create this parallel. Yeah, there's a zone of support coming in, but it's not very hardy, okay? So look at how we fell to the bear support power zone, rallied, spiked above the bear resistance power zone, but held from there. More downside in Verizon ahead. First for a retest of the 46.20 low. After that, watch out below, 43.97. All right. I'm just keeping going until Jeanette kicks me off, like I said. All right, soybeans, sure. I'm trying to mix up asset classes and go back and forth here. All right, so beans. On beans, we've been in this giant kind of trading range, but it's had very significant moves that can be traded. And when you look here, you can see that we're coming into some support. Okay, if I draw this trend line, I think this trend line might be helpful. Not so much. Big, nasty range. I expect further downside to these lows, this 995 to 990 area. All right, that's soybeans. FXI, it's interesting. That's an ETF. Okay, so China, large cap ETF. Okay, I've never looked at this chart, so I thought I'd try something new. Take a look though, guys. If you're using R-side power zones, this held the bull support zone when you have this move. We went all the way to the bull resistance power zone. And now, just like many other markets, is in a big choppy range. I think it's also going to be at that kind of inflection point, because if you see here, if this is my eyeballing is right, we're at this trend line, and we've also got support along the bottom. So this is more of a descending triangle where you have like a flat bottom. Okay, this spike low is hard to count, but if you look at all these lows back from December through April through early May, this is the shape of this pattern. I would watch for a breakout in either direction. Okay, FXI, that's an interesting one. Okay, Walmart. Walmart, ooh, you can see I had some analysis on this. This was, I think, I mentioned, actually, no, let me not say that. I thought I did a report on it, but can't remember, when it had been reporting earnings, and I was talking about it being in a range. But it looks like we're coming into a support. I had delineated 81.99. I've already got the analysis done on this one, guys. Okay, so here are my next two supports for Walmart. Targets to the downside. This is a weak market. Now this resistance changes to 89.66. That's the most important thing to watch in this whole move. So 77.50 and 73.13 the next. And look at this, guys. I haven't looked at this in a while. Look at how nicely the high on April 30th in price held, with the R side just shying away from the bear resistance power zone and falling lower. All right, let me round this out with another currency, and then I'm going to stop because...
Yeah, I'm here, so you can do one more, and then I'll take it.
I'll do one more. Thanks. No, sure, no problem. All right. Euro. Ooh. So this broke below a big nasty trend line that I had. All these remaining lines from before, guys, are just when I did some public kind of videos on them. As you can see, those were my directional biases on those dates. I had since done one update, I can't remember. But right now, Euro's not looking so hot. Weakening out of the bear resistance power zone since April 17th. The key level to watch would be the daily lower high from May 3rd, because that is maintaining the structure of this move down from April 17th. So that's the level to watch for potential change in trend if we're going to get one, but otherwise I think we're more likely to move down to the lows from December 2017. So on my chart that reads as 1.17172 if you throw in the extra digit. Okay, so it looks like I covered, I'm like keeping track here just to see how fast I could go. 1, 2, 3, 4, 5, 6, 7, 8, 9 tickers in 18 minutes. So what was I averaging? Like 2 minutes a ticker? Not bad. All right, guys, thanks a lot. Stick around for your other speakers, and himaready.com/powers where you can join me in my class. You're welcome, Marcelo. Thank you, Alex. Appreciate it.